Hello, hello. Welcome, beautiful people, to our fourth webinar in our series of Beyond the Bank. Today's webinar is called Practical Savings Tools for Underserved Communities. Obviously, we already had the webinar I think last week, Friday, but because of digital issues, we weren't able to save the recording in a way that is great for all of you. So we're doing it again, a second time, so that all of you may know what this team was about. And today we'll be talking about saving circles, and we're going to be presenting a digital tool called Stacks, which is created to help communities save together better. We are Breck Cooperative. Breck Cooperative is a Web3 post capitalist solidarity network that is created with the purpose of building digital and financial tools needed for reaching a solidarity economy, a post capitalist economy. We share labor, resources, decision making, and mentorship together. We are a worker directed nonprofit, and we want to be the ones to build the structures that are needed for a better tomorrow, especially in the world where profit maximization and destructive extractive organizations are the status quo. We are founded on the principles of mutual aid, transparent governance, tool power, and economic democracy. Why do we do what we do? Well, cooperation and collaboration are rooted in the foundations of human nature. Communities have banded together for ages in order to collaborate and create better lives for themselves and the people around them. When you think about farmers, when you think about hunters and gatherers, communities were fundamental for their survival and their thriving. And sometimes we live in a world where it seems as though we've forgotten what that looks like because we're all busy doing our own thing. And yeah, how do we overcome those barriers? That's why we're here. We believe that the digital tools that we have access today are pivotal and important for creating the foundation for a better tomorrow. It's not just about doing things online, it's not just about doing things physically, it's both. So we're the amalgamation of that, where the bread that has been baked by the ingredients that were scattered. And this past year, we were able to distribute around $31,000 in bread funding, which is funding that we have using one of the projects that has been key for our existence, which is the Solidarity Fund, where we distribute money to impact organizations. We've organized 72 community events this past year. Some of them were in person, some of them were online, some of them were hybrid. We've been working with a lot of different organizations, trying to further the cause of these digital infrastructures. We have a few new partnerships with organizations like the Movement Trust, like Sierra Foundation, like Gnosis, which is one of our biggest supporters. And yeah, I think our founder, Josh, is also here to kind of elaborate a bit more on some of the work that we've been doing, but also the context that exists behind why we're here.
Yeah, thank you, Roberto. My name is Josh Savia. I'm one of the co-founders of Bread Cooperative. And I just wanted to kind of share some of the inspirations of some of the work that we do. I think what's important and necessary context is that what we're trying to do is not necessarily build everything again from scratch, but instead to be inspired by the work and stand on the shoulders of giants, of people who have been building the types of solidarity economic infrastructure. And but the guy you see on the top right, Friedrich Raiffeisen, he is the father of the cooperative banking movement in Germany and inspired a lot of it throughout Europe. In the middle here, you'll see Mondragon, which is one of the largest cooperatives in the world, I believe based in the Basque Country, where they've been able to show that cooperative business is viable and can bring a lot of value to people and is sustainable. On the left, we have a little tool library. We're inspired by different types of structures that people come together in order to express solidarity with one another by sharing resources, by sharing money. In particular, on the bottom right, you'll see kind of people who are engaging in their own versions of saving circles, which is what we're specifically going to be talking about for this webinar. And as well, I think the last one that was just showed up is community currencies. So these are just some of the inspirations that we take from the already existing meat space world and how we try to find ways in which we can take the tools and affordances that come out of the blockchain and crypto world to augment those already existing types of infrastructure and association, not to completely replace it, but instead to plug into an already existing thriving solidarity economy. And so the conceptual framework that we use to think about how we build our applications is what we call solidarity primitives or solidarity tools. So it's a rethinking of what many people in the crypto or Web3 space will call financial primitives, in which you create kind of the building blocks, technical building blocks that you combine together in order to create new, oftentimes financial products. But here we're trying to think about what are the technical building blocks for creating solidaristic economic relationships that's mediated through technical systems, perhaps like cryptocurrency and blockchains. And so the kind of our three applications in our suite. One is the Solidarity Fund, which is already out in public. If you go to fund.bread.coop, you can interact with it. You can create the bread token, which is our community token, kind of like a community currency. It also functions like a kind of credit union where you, as someone who puts money into it, the amount of bread that you have gives you a certain number of votes in which you can choose to spread the yield that is earned through decentralized finance underneath the application. However, today we're specifically going to be talking about Stacks, which is our application that we're building saving circles implementations using crypto as well. And then Safety Net is another application that we're building a little bit more in the future. Today we're focusing on Stacks. Safety Net is more of a mutual insurance product that we're exploring. But first, in order to get to that, we're first building Stacks in order to get to that place.
Perfect. So what are saving circles? Right. So the context of why we are building what we're building is because we see that unbanked people have a lack of access to funding, to finance, to liquidity in general. And so often they would seek access to those things through informal financial systems in order to smooth out their income and spending over time. Because of that foresight, they have greater stability. This vulnerability that these precarious systems kind of breeds on these people is the reason why they look towards community for transformation, and they look towards community for opportunities to participate in funding mechanisms that provide them resources. And that's what solidarity finance is all about. It's rooted in mutual aid, it's rooted in trust and collective responsibility, understanding, right, that individuals might not have access to all of the funding that they need, but as a community you can come together, pool your money, your resources, and then get the help that you need, support each other instead of relying on profit driven tools. And we have seen this throughout history and how successful it is. There's a saving circle type of tool called Tandas, which is one of the common financial saving mechanisms that a lot of people use all around the world. I come from Curacao. I know my family used to do it. My mother used to organize something we called Sum, which was a saving tool where my aunts and some family friends, they would pool like 100 euros every month. And then every month, everybody else, one single person of the group would get a turn to receive their funding. And it really helped them because whether it's for Christmas, whether it's your birthday, whether it's for repairs around the house, or your car broke down, money was there for you. And it also shows that a lot of consumers, especially people that do not have access to banking. They use prepaid cards. I remember my dad also used to get these prepaid cards, even if it was from a bank, it was prepaid because they didn't want to put themselves into the position that they would be indebted because of the high interest rates of these credit card systems, especially in countries in the global south. Um, because ultimately they distrust mainstream financial services for the right reasons, often because these services have not always brought the opportunities and financial well-being that they desperately sought for. So they had to band together and do things in a different way. And you see that is still happening now, and that's an even bigger development, right? Because a lot of people, they're going towards smaller credit unions, towards labor markets. They're trying to figure out how they can work together to fulfill their own needs, because obviously the system is not working. It's what we see, it's what we experience, and that's because of the challenges of a lot of these financial systems. There's geographical limitations. There some countries people don't even have access to bank. I was speaking to a friend from Nigeria, and they were telling me that if they want to buy a car, they have to actually buy the car. So they don't get loans, they don't get access to credit systems, and that makes it really hard for them to save even for housing and stuff like that. The procedures are often very complex. If you want to become a member, you have to fill in a lot of paperwork. What if, to get approved for a loan, you have to go through a lot of steps. And that's also a barrier to entry. Like some places, like I remember in Curacao, where I'm from, some people were not allowed to have bank accounts. You were just not liquid enough, you just did not make enough money, and then you're straight out of luck. So you can't borrow, you can't save, you gotta keep your money under the mattress, under your bed. And sometimes that's great, but if you're in a risky neighborhood, if there's crime, that becomes an existential risk. And even when you have access, when everything is right, the loans are often predatory, meaning that their interest rates are too high, the payment schemes are incredibly hostile for people, and that's a big challenge. And we see the distrust does not make it better, because you see that, like, a lot of these organizations are involved with money laundering, or accusations thereof that can inform negative perspectives on them. And then you also see other examples of predatory systems where there are banking systems that have 100% APR. So if you fall into that, you're dead. And not a lot has changed. So people are still struggling. And a lot of them, normal people, carry out these frequent financial transactions, using these informal instruments. They have mutual aid networks, you know, family, church, people help each other out. They save together, or they do ROSCAs. They do rotating savings groups, like what we're going to be talking about today. These people are usually in urban areas or in smaller communities. They're people with lower incomes, and they make these informal tools, they're often more accessible, because what do you do? And of course, a ROSCA is not just a digital financial tool, it's also a type of bread from Latin America for all the Hispanic Americanos that are in the group, the Latinos. They know. I think Josh is going to speak to us a bit more about how these saving circles work.
So yeah, I just want to explain a bit how a basic ROSCA or saving circle works. Keep in mind that a saving circle is effectively a way to collectivize capital, or what little bits of money that people have together, in order to facilitate essentially zero interest loans, to give people access to capital and liquidity for some moment in time so that they can make particular purchases. So in a normal saving circle, you will have some group of people. Let's say in this example, we have 3 people, which we would all make a deposit of the same amount of money at some sort of interval. So in this example, let's say we're all giving $100 every month. So every month, everyone is giving $100 into the pot, and then one person of the group is getting the full amount. So they're getting $300 if they're three people that month. And so you basically just keep going. Then each rotation, each month, you are trading off who is the person that's getting the liquidity for that month. So whenever that person receives that amount of liquidity, they then get this small injection where they're able to make some type of big purchase that could be important for them, which we could talk about the use cases maybe in a little bit in case it's not super clear for people. But that's basically how a basic saving circle works. You have many different names in many different places, and each one oftentimes may have a slight difference or a slight peculiarity to it. For example, a chit fund in India is something where it's a saving circle, except the person that receives the money first gets a little bit less than the next person, the next person. So the person at the end ends up earning a little bit of money by engaging in the saving circle. So there's sometimes these like little bits of differences, but the basic idea is effectively the same. So if we go to the next slide.
Yeah. So saving circles, why do people even use them? Often they're very small. So keeping loans small prevents borrowers from accumulating debts they cannot repay. They have short repayment periods. The brief terms reduce the risk of debt building up over time. So keeping these repayment periods very short, a few months, allows them to better plan for the future while still getting access to collateral. Lower transaction costs because they're informal, they don't require a lot of extra costs from the bank. There's also often fewer users and fewer intermediation costs compared to formal institutions. So people are connected to each other, they're indebted to each other, meaning that whether that's social rewards, the system incentivizes members to fulfill their commitments. If you don't pay, your aunt doesn't get her money, and you love your aunt. So you're going to make sure that you are committed to that. And there's a clear framework of incentives. People are connected, their communities are intertwined. And you can even see that from this example out of Vietnam, where field experiments confirmed that ROSCA participation significantly improved the savings outcomes compared to individual arrangements because the group structure provided psychological and practical support. If you can't make it, if you don't believe that you're doing it, maybe you can't eat in the month, but your aunt's going to cook for you, or your mom's going to provide some food for you. So you have a deeper connection, a deeper embedding within community that allows you to be able to succeed. Because if you're saving the money on your own, you have a little piggy bank at home, that's not always going to work because there's always another extra emergency that you might need to fulfill. Saving circles provides use cases for a lot of major life expenses. I remember back home, our parents used to have to pay for school books, and those were big costs. They cost like a thousand or 2,000 a year, and that was a lot of money for us. Also, because I had siblings, I know my aunt had three children, and she was a single mother. So bigger life expenses become a big deal when people do not have funding to, you know, provide the transitionary costs to fulfill these costs. Whether that's in education, whether it's getting a home deposit. If you want to buy your new house, that requires a lump sum at the beginning. And this lump sum can be a big barrier for a lot of people. Buying a car, you have to pay some money up front. Weddings are big costs, especially in communities where weddings are a big thing. And this is expensive, especially in small businesses. If you have to buy something for your restaurant, if you need more inventory, if you want to invest in property together, if you want to expand your business to make it more profitable, those types of use cases are very much there with regards to saving circles, especially when communities do it together with people that they know or they care about, or people that they trust, or people that they build trust with. And then you see some examples of these things happening in the real world. It's not just something that people are doing informally, but organizations are paying attention to that. I think these are a few from the Middle East. There's one in France too. I think PayPal also has their own application for saving circles. There's a big one called Circle in France. And people are pulling money together. They're saving together because they realize, it works. And it works to fulfill my needs, and it works to bring me together closer with the people around me in a way that is not extractive and not destructive and not just focused on consumption. And I think that's the reason why we're bridging this very social mutual aid solidarity economy world with the power of Web3 technologies and crypto, because you're able to elevate and maybe even make it more efficient and more impactful what has already been happening for ages. And I think Josh will give us an example of why crypto is important.
So, yeah, so I think, it's one of the first questions probably people should be asking. We've seen the $500 billion market that Saving Circles is, or amount of economic activity that Saving Circles is around the world, begin to become platforms or to join platforms and the platformization of Saving Circles in many countries. And so I think there's a question of like, why then move to crypto if there are already these other platforms? And I think the big thing is that what savings will kind of rely on is basically governance between people that they're willing to make, or the fact that they don't make their commitments in a saving circle. And so where I think cryptocurrency is really interesting is to be able to provide guarantees through cryptographic means. So using cryptography to be able to give guarantees to people who are engaging in a saving circle. It's not uncommon that someone in a saving circle may not make their commitments. So I think having more clear guardrails and guidelines that are mutually agreed upon rather than necessarily just enforced through a centralized platform is something that's very interesting. And one of these ways that kind of this happens is through something like a decentralized escrow service. So platforms basically, in many ways, kind of act as an escrow, but they don't necessarily always have the tools there to be able to kind of relieve what is the maybe particular conflict ongoing or not. So crypto is able to, we can create smart contracts that provide a decentralized escrow service. At the same time, so this is basically all the ability to have some sort of collective governance instead of relying on a centralized company to administer these saving circles. At the same time, crypto provides cheap transactions, especially if it's cross-border. So, saving circles are things that are engaged with by many people who are immigrants in countries around the world. They bring these practices over with them whenever they move to a new country. And so being able to use the money that they are engaging within saving circles to be able to send also to their families back home is something that is very, I think, appealing, very useful for this type of group of people. Because a blockchain is transparent and can show and see how people are making transactions with one another, it's also really great for credit reporting. So we know some groups who have been able to facilitate saving circles with communities and be able to report the data about their kind of transactions between others in a saving circle so that they can report that to credit bureaus and earn a credit report and a credit history so that they can get other forms of loans and maybe mortgages and things like that. Programmable incentives, I think, is really interesting. This is something that is more not possible with cash, of course, or not so easily possible with cash, and not something that platforms really do as well that we've been able to see. So one of the things that we're really interested in is being able to provide a system where institutions would be able to incentivize savings with a certain group of people. So crypto is really good because everything is recorded. You can have really neat, kind of black and white rules about what, in this case, it's savings. And so I think there are lots of different types of institutions that would be really interested in being able to incentivize savings within a particular population or group. Another one is debanking resistance. So crypto allows you to not have to worry about getting your bank blocked or something like that, or to be debanked for one reason or another. Common problem with different types of communities, especially ones that are very mobile. Easy access to yield opportunities, so it makes it easier to offer certain opportunities to earn yield and interest using decentralized finance directly from our application, for example. And portable identity, so being able to take an identity in one place and apply it into another. So if we are able to show some sort of credit history or credit report because of their actions taking place on our platform, we can also port that and make it interoperable with other platforms and other places. So those are just like some of the reasons and some of the things that we've been exploring as to why we think it would be really useful and important for us to pursue saving circles in using crypto rails. And so now I think is the time whenever I will give a demo of our application. So one of the things, so what you saw in the presentation was a screenshot of our actual demo or our actual working product. But what I wanted to do for this, and what I did for this webinar, is I actually wanted to show what is the end state actually of what we want to build. So if you humor me, I would love to show and take you down a story and a narrative that we can all follow together so that we can see what it is exactly we're trying to build. And also it's a way for us to find partners and funders and contributors who all want to make this a reality and to see this succeed. This is basically a non-functioning version of the end state of what we're trying to build. The idea is that as a user, and in this case, in this story, I really want to focus on Mexico, actually, because that is the context that we know a little bit about and what our team members are based in. And in their context, it's very common for people to engage in saving circles, or tandas, they're called there, with their coworkers. But so let's say you're interested in pursuing doing some saving circles. You go to the Stacks website, and here you would already be able to log in and start saving. This website just shows kind of basic information of what you would expect in this application. Click Start Saving. You would create your account. Continue. It would ask you, what are some of your savings goals? What are the things you're trying to save for? You may be trying to buy a home, pay off some debts. Shown what are already the use cases, the biggest use cases for using Stacks. Let's say these are some of my goals. I can put down how much I'm looking to save, my timeline, and how much it's possible for me to save each month as well. So that will help in the background for us to know what types of saving circles and programs we should be recommending to this user. So identity is really important, I think, in this type of use case as well. So we can provide some level of human verification in a way that's also privacy preserving using zero-knowledge proofs. But we want to just be able to just identify and be able to have a high level of confidence that this is a user and not just some sort of bot. And so we continue, we create our accounts, and then here I'm immediately shown the dashboard that summarizes the various stacks that I'm a part of. So a stack is not just a saving circle, but can be many different things, depending on what types of arrangements that the user wants to take part in. If I click Create Stack, I'll be able to see some of the options that we have. So we have a ROSCA. You can do a chit fund, which is the one I described earlier, savings challenge, emergency fund, goal-based. So if you want to save money together to all buy something collectively, you can do that. Say I'm going to do a ROSCA. It'll ask me for the details of that ROSCA, how much needs to be contributed, at what frequency, and the number of members that I expect to be included in this ROSCA. And then I would invite the people that I would want to invite to this stack, to this ROSCA. And I would create it, and then I should see it in my dashboard. So we can look at the example here. I have a family savings stack. So this is with my family, in which we're all engaging in a ROSCA, in which we're all giving, in this case, it looks like $500 per month. And I can see the rotation order. I can see who's going to go next. I was the first one. I'm Diego. I've already received my payout of $2,000, and next is going to be Sarah in this payout. And here I can, I can automate my contributions. I can make one manually. I can invite more people. I can look at the settings, all the different things that I would need to interact with this particular stack. I will be able to see it here. If I look at other types of stacks like the chit fund, it's going to look a little bit different because it's a different arrangement. And so here, a chit fund is determined by people who make a minimum bid. So how much of a discount are you willing to get the payout for? And then if we go to the other ones, we could even see, for example, this one where we're saving together with some group of friends to go and take a group trip to Costa Rica. And so me and all my friends are saving some amount of money to do that. And so I can see everything that I want and that I need around the different stacks that I'm a part of right here just on the dashboard. The next part that I think is super important for this type of application is the community. So we don't want to underestimate the sociality of engaging in a saving circle and what that means between people and how we can actually get people to come together. In a normal saving circle in meet space, there is a high amount of social interaction that is involved with making a saving circle. And so here, what we're trying to do is create communities in which people have shared goals and shared things in mind that they're trying to do. So I said earlier that I am trying to buy my first home. So I'm in the first time home buyer community where I can see this community, which is really meant to share all types of information for first time home buyers. And I can kind of overview and see the different type of stacks that have already been created inside of this community. People who have come together and found each other through this community, perhaps. I can engage in discussion where I can see tips and tricks on what I should know about applying for my first mortgage to get my first home. I can see the other members that are part of this community, maybe where they're based, what their goals are. What would be really, really cool is to be able to match with the community of people that are inside of it. So if there's a lot of people who are looking for homes, we may want to match them up based on the amount of money they're trying to save, maybe where they're based. I can click on find my matches and I can find some of the people that may be interesting for me to engage with and to be able to begin saving money with so that we can all be able to afford the down payment for our first home. Because what often happens is that people may be able to pay and afford the mortgage because they can already pay rent. The thing that they're missing is to be able to pay for the down payment so that they can simply be able to get their first step on the property ladder. And so by getting a bunch of people who are willing to collectivize their capital together, we can allow all of these different people to be able to get their first homes, get a down payment on their first home, and at a zero interest rate. And then here you can also see each community has some amount of governance that they are in, how they manage their community. And so if I go back, the other type of community that I wanted to show that's really interesting and important, I think, are private communities. So in this case, Diego is an employee at Grupo Financiero del Bajío. So he is an employee there. It's very common for coworkers to make saving circles. So here he can see what types of stacks different people are engaging in this community, in his company. And this is something that the company perhaps is encouraging on purpose and maybe adding matching funds. We see matching funds are available because they want to incentivize their employees to be able to reach their savings goals, right? An employee that is able to reach their savings goals is also a happier employee. And so here they can engage with all the different ways that they want. Here, tips for new tandas and how, in the company it generally works. They can see the members of all their coworkers, and they also have some amount of governance, but except here, maybe it's just led by the admins or people from the company, maybe help run this community. So another important aspect to this application is the trust score, which is basically a user's reputation. So as someone engages in saving circles, like I mentioned before, it's effectively a way to receive zero interest loans. And so what we think would be really useful and important is to be able to track people's reputation and credit history, at least internal in the application, so that other users who maybe don't know the other person personally are able to figure out whether they can trust to be in a savings circle with them. So it adds a little bit of gamification, where the more kinds of stacks and saving circles you engage in, the more that you're able to show that people can trust you and are willing to engage in saving circles with you. At the same time, another thing that I think would be extremely important and useful for users is to be able to export the credit history that they have within the application to the credit bureaus of their country, so that they can engage in other types of savings and loans. And so the idea here is that every credit bureau, I mean, depending on the country, they'll just have different standards for how the data needs to be exported. So one thing we can do, and we need to, of course, figure out the exact details when we build it out, but is either download the report so that people can then simply forward it to the right agency and the right people, or even if we're able to have a kind of integration with certain credit bureaus, we can automatically send it to those credit bureaus so that they can improve their credit score. So yeah, these are some of the big features. I think the other big feature that I wanted to share as well are matching funds. So I mentioned matching funds before on the employer level, but here I think where it'd be interesting to engage with institutions, philanthropic organizations, and impact investors, for example, is to create matching funds where people can apply if they fit certain criteria. So let's say for certain types of initiatives. So here, for example, the youth savings initiative could be funded by a particular philanthropic organization that is really focused on helping the youth learn financial skills, to learn how to do personal finance and be able to save money for themselves. We can imagine even something like specific as women in Mexico, for example, could be a potential matching fund where users would be able to prove that they are prove their gender and prove their nationality using zero knowledge proofs through something like either a ZK passport or a human passport. These are all different types of identity solutions that are available. There's even more out there that we could explore and try to pull out. But the point being that there are solutions out there that are also able to preserve privacy while being able to prove certain aspects of the user, so that these organizations would be able to be sure that their matching funds are targeted and going to the right people. And then maybe one of the last things is the marketplace. So here, if you think about stacks and what it actually is, at the protocol level is basically a collection of capital. It's like a bunch of capital stored in a particular protocol. Effectively, what we're creating in some sense is a kind of consumer cooperative, right? So consumer cooperatives what they're really good at doing is getting discounts on products because they're able to buy in bulk. One of the things that we can do is use the users that are on this protocol to collectivize in a way that also give them extra benefits, like to be able to buy certain services and certain products in bulk. One thing you may have noticed is that there isn't anywhere mentioned crypto, and that's on purpose. What we're trying to do is build an application where the crypto part is really in the background. It's really just something that is facilitating the thing that we want rather than being the focus. So if we go to wallet, you'll see the amount of money you may have and what your balances are, and you'll maybe have a wallet address, your Ethereum wallet address that is embedded in the application, but it's not the focus of how the user should be interacting with this application. And so, yeah, we're really trying to make this an application that is meant for consumers, meant for people who don't need to keep up with the various things that you need to keep up with when you're using crypto tools, while also providing the sovereignty to the user, the control to the user, rather than being a custodian of their funds. They are still able to control the funds that they have. The last bit is just investments. So like I mentioned in the slide before, being able to offer opportunities for yield to users is, I think, an important part of making users sticky, to provide them other options to be able to earn money, so that there is both a collective aspect to saving and maybe perhaps a more individual aspect to savings as well, that they can engage in both. But the prime focus of what we're trying to do is to show people that by collectivizing, you're able to reach your saving goals faster, and you're able to become more stable in your financial health. So yeah, these are just some of the things in stacks that we've gotten so far. It's quite a few things. We have a lot to be working on now, but I hope this was, illustrative of what are the type of application that we're trying to build with saving circles. And of course, this would usually be the time in the webinar where I would pause and ask for questions. So if you have questions, be sure to add those in the comments. Feel free to ask whatever questions you have, and we'll get to it on the comments.
Ultimately, y'all, this is all a product of our vision. We're building financial tools today for solidarity, tomorrow, forever, for everyone. And this is just one of the steps within this process of how we are implementing our bread vision for the world. Very dramatic, I know. Ultimately, we have a few members that are part of bread cooperatives that are right now receiving yield, region coordination, symbiotic, crypto commons association, system wallet, gardens, and of course our bread cooperative core, our team that is building this technology. We've been distributing funding, as we've mentioned before, for the last 2 years. This is the latest distribution of solidarity funding for our community. And what we really want to show with this presentation and with everything that we're doing, right, is that, solidarity is not just something abstract. It's something that you can make concrete. It's something that you can make physical. It's something you can make visible that impacts real life communities and real life people. All of these things have been done in different ways before, but we're creating this combination of crypto technology, AI technology, and bringing it together with these mechanisms of the past in order to provide the infrastructure needed for a changing world, a world where there is a lot of precarity, there is a lot of volatility. So, what do people do? They come together. And that's what we're doing. We're building solidarity forever. And please follow us on LinkedIn, sign up for our newsletter. There's a Linktree link, and reach out to us if you have any questions, if you want to partner with us, if you want to provide funding, if you want to be part of our user research group where we're testing out these things. We're here to help all of you. We are Bread Cooperative, and I hope you all have a wonderful day or night, wherever you are, whenever you are.